Lee, look, what did you make of the session? Any surprise that we did close in positive territory?
A bit of a surprise that we did finish up 0.2%, especially given in the US we saw the market down by 1.7% and stocks like BHP Billiton losing 2.8% in terms of the ADRs. It was a bit of a strange day today. We did see the defensive areas finish in the black, the healthcare, the telecom, the utilities, seeing quite a strong performance all throughout the day. But I think the real difference in our market came from the commodity space, the materials and the energy sector, which was up by 0.5 to 0.6%. In fact, BHP Billiton managed a gain of 1.1% on the Australian market and Rio Tinto managed a gain of 0.6%. But it wasn't just the Australian market which was looking good today, and what we have seen in 2011 are record correlations across different asset classes. And in fact, if we compare the Australian market to the euro versus the US dollar, they really move lockline in step together today. This is the intraday graph of the Australian market, and if I just overlay the euro versus the US currency over the Australian market, this is what it looks like, and you can see that they're very similar looking charts today. So really we did see a move back into risk assets, especially in the second half of the session. Stock specific, there was a number of different things out, but one of the biggest impacts, I guess, was board reshuffles and CEOs resigning. We saw Aston down by more than 11%. We also saw Mount Gibsonite down by 9%, both announcing that their CEOs at least will disappear, and Aston announcing that its CFO as well as an independent director would resign. So a busy day on the Australian market, and all up it ended up being a good one.
Julia, what about volumes? Obviously they've been, well, I think light is putting being a bit sort of kind, if you like. It's been anemic to say the least. What about today? Did we see any pickup?
It still feels like holidays. $3.8 billion traded. So this is the fifth consecutive session where we have seen volumes under that $4 billion mark for the Australian market. So we are still seeing anemic volumes, and that is leading to a little bit of volatility on the Australian market. But of course, if we have a look at the last 10 days, and if I can just bring up the last couple of weeks on the Australian market, this is what it looks like. There's been some absolute huge moves. We've seen big moves down as well as big moves up, but in the end you could have just drawn a line across, and really it's just been consolidation for the market. The market has been very quiet and it hasn't been doing too much at all.
As James Hardie back in the black, investors loved it. What did they close at? Just up over 6.5%.
James Hardie doing extremely well, and all on the back of that first half result. And I guess it was a very strong result coming through, because we actually saw operational profit growth, and we saw growth of about 32%. So on track to perhaps outperform and overreach above its full-year guidance, which is for operating profit, excluding all the asbestos costs and the governance costs, of $126 million to $140 million. Sales was up by 6.5%. And of course, if we have a look at James Hardie's business, 90% of its business, 90% of its earnings comes from the US. So the US housing market is a core driver of its earnings. And as we start to see the US housing market not only stabilise but tick up, investors should, I guess, be rewarded in terms of stock price, because as the US housing market stabilises, we'll probably also see a strengthening in that US dollar as well. So a double positive for investors once we start to see that happening.
Days of speculation about this a bit, and I suppose for once the media got it pretty spot on in terms of the actual price, but well, vehemently rejected it. And similar to, I suppose, what happened with Blackstone when they lobbed in a bit as well, and they rejected and their share price tanked. Obviously not seeing it back down to those sort of levels, but what did you think of it all?
I think that's the trouble with the market's getting a sense of deja vu. When the Blackstone bid was rejected at $2.50 because it didn't reflect the fundamental value or a change of control in the company, and then we saw the shares coming back down to earth, down at $1.70. And if you strip out the takeover, this is quite a difficult business. Spotless Group, it's not a scalable business, it's people intensive, so wages is a huge cost. They're looking at this restructure. They've still got another 2 to 3 years to go to become an integrated services company, and they have all these divisions: the managed services division, the food division, the retail services division, the painting division. So it is a difficult environment for a company like this. The business is a difficult one as well. High wage costs, not scalable. And if you strip out the takeover offer, I guess the market's fearing that the share price will once again come back down to earth.